There's a saying, it's like there's strategies you pursue to create wealth. There's other strategies you pursue to keep it. You want to have some kind of niche, some kind of moat that is defensible. You want to identify pockets of the overall market that do not scale forever. And that's generally because of some kind of geographical or physical constraint. I think the primary lens is shareholder value. When you acquire a business, you have to think, okay, who are my shareholders? How am I going to generate return on their capital for an appropriate amount of risk? Where basically we're looking for something that is in the vertical of producing a healthy food product that scales with its balance sheet. Secondarily, can we buy these businesses for, let's say, 2 to 4x of their cash generation, EBITDA, let's say, or just EBIT? And then the third piece of that is if you're doing those two things and you're generating cash, what are you doing with that cash?
My guest today is Marcus Mitchell, founder of Shire Capital Management and former CIO of Bonnefield, Canada's largest farmland manager. Marcus has overseen more than $1 billion worth of farmland acquisitions, and in 2021, he decided to take a different path, leaving a top role at a large institution to start his own firm. In this conversation, we explore the mental models Marcus uses to evaluate deals, what makes him lean in or walk away, and how he thinks about creating value after the ink is dry. For founders, this is about seeing the world through the eyes of a buyer and also learning from someone who's built something for himself. Marcus, welcome to the show.
Hey, thanks, Krystyn. It's great to be here.
So I'd love to start a little bit more about your own personal journey from this institutional role to starting your own firm. How did you get into farmland investing, the oldest asset class in the world?
Yeah, no, it's a good question. And I feel like I'm dating myself. It's wild that, I graduated 15 years ago from Western. And at the time, you probably recall, Krystyn, it was just after the great financial crisis. The world looked very different than it did today. It was a rough job market. I guess that's similar to what we're seeing today. But one of the things that really stuck out to me when I graduated, I actually started my career at Colliers International. I thought I was going to be in commercial real estate. It seemed like 50% of the people I graduated with were doing the same thing. And obviously, it's a major part of our economy, especially here in Canada, the GTA. One of the things I noted, though, when I was doing some of my research at the time about the asset class was through the great financial crisis, there are very few assets that remained non-correlated. So seeing that, I thought was quite interesting. And having been focused on real estate and having a sense of what had happened in Canada, but certainly North America regarding the institutionalization of that asset class, it felt like farmland was probably maybe 3 or 4 decades behind where commercial real estate was, but was primed to be consolidated, as it were, and have more institutional capital come into the space because of its diversification benefits, but also because it proved to be a very effective inflation hedge. And as far as institutions were concerned, a very good match for their long-term liabilities. So a lot of institutions, people are living longer, they have beneficiaries they need to pay for longer. Having assets in their portfolio that are durable in that regard seemed to make sense. And so in 2011, I had the opportunity to join a firm called Bonnefield Financial, which at the time nobody knew about. The firm had $10 million under management at the time. Most of it was the founder's money. And joining at that time, I just said, look, I just had a sense that because of what had transpired through the great financial crisis, there was a really good future and opportunity in this sector. And for myself, I said, I want to be part of that, hopefully build the industry out in Canada, and have been part of the early days of that industry's formation. And long story short, that's basically what happened. So over the next 10 years, we had quite a lot of success. We ended up raising about $1 billion from primarily Canadian pension plans. And I was involved with the investment of that capital and the management of those assets over that time, which I loved. So through my 20s, I spent most of my time, traipsing around rural Canada, meeting amazing people, farmers of all stripes, growing different crops. And I just loved it. I just thought it was so cool just to be able to see different parts of our country, meet people that are obviously outside of an urban context and have, different ways of life, different ideas about things, but ultimately, just good people. Like they're people you'd love to hang out with and get to know a bit. And I really, really loved what I did. I think during that time, I had a bit of a epiphany moment where we had formulated our strategy at the time around just owning bare row crop land. And obviously when people think, Canadian farmland, they think the prairies, like, wide open spaces, really big combines growing your typical commodity crops. So in the prairies, wheat, barley, canola. In Eastern Canada, you might grow a lot of corn and soybeans, which is more traditional in, let's say, the USI states. One of the things that really struck me at one point, though, is I had this thought where I was like, man, it's really weird. I wouldn't eat anything that's like growing on farms that we're investing in. It really, in my view, that's where that sector is now in terms of trying to evolve past the, let's make food cheap and plentiful to let's make food healthy and optimal for people. And I
Yeah.
think that's really the epiphany that I had at the time. And so really in my later years at Bonnefield, I was like, look, what are the sectors in this space that can combine all the things I love about owning land and ownership of something tangible and real, but instead of growing something that's generic and widely available and cheap, produce something that's ultimately a product that's healthy and that at the end of the day the consumer who eats it will be better for it, and not worse for it. And so looking closely at this space, it looked to me, obviously, like horticulture would be a better bet in that regard. And it just so happened that, horticultural land is an incredibly small niche subsector of the overall farmland category. And I think once I'd made the decision to leave Bonnefield during COVID, I partnered with my business partner, Vu Wen, at the time. Like he had been at Brookfield for 10 years. So obviously he was very steeped in the real asset space and investing in, long-lived, tangible assets for cash flow. We both said like, look, we kind of see where the puck is going with regard to capital allocations kind of moving to this space. We understand the trends regarding health are likely to resonate more, with our investor base. And we decided that was probably a sensible thing to focus on. I think from the time I started my career, from graduating in 2010 to today, there's been something like 200 billion in additional allocations from institutions globally
Wow.
towards agriculture and farmland investing. And so it's really gone from almost a non-existent sector to a very major asset class on the books of, major institutional asset allocators around the world. And so when we looked at that, we thought, look, right, I think this is a trend that we would feel good about staking our careers around. And ultimately, it's something that we feel good about having accountability in, ownership in, and ultimately feel like we can make a difference in. And that's really how we came to do what we do.
Well, and I see what this sort of through line, if I think about, your origin story, you landed in this, amazing environment where you're able to see $1 billion raise and actually see the scale and be part of that as a leader in the company at Bonnefield.
Awesome.
And then to see a different niche and sort of an opportunity in your investment thesis and shape that with your partner around, you know, uh, what I would say sounds very much like a values-driven, values-aligned decision. And what we talk a lot about with our clients is when you think about your capital and you think about how it's allocated, once you've exited and you have, wealth to think about, it has to be values-driven in how you
Yeah,
allocate it. Because
that's right.
wealth is a tool. It's not the quest. It's not the destination. And so was that an important part of that jump for you? Just finding something more values aligned to how you were seeing the space that was also an attractive segment of the market to go after?
Yeah, no, for sure. I mean, no question. Like the values piece, I think leading with that is so essential to being interested in what you're doing and feeling good about what you're doing. Because ultimately you get one life, you have one
Yeah.
career, and at the end of it, you kind of want to look back and say, "Look, I did something that I'm proud of, not something that I did to pay the bills." That's fine if you have the ability and the opportunity and the flexibility to chase something that's values aligned. I mean, 100% go for
Yeah.
it. I mean, it's the
Yeah.
old adage, just like do something that you like and you value, do something that pays you, do something you have skills in. If you can get that,
Ikigai.
yeah,
Ikigai. Japanese. Yeah, it's right. It's like that Venn diagram. I love that perspective. That sweet spot.
100%.
Hmm.
If you're lucky enough to have something in your life where that Venn diagram overlaps, I mean, it's a very clarifying exercise. And for me, that was just it. And so,
Yeah.
2021, it was still peak COVID, as you probably recall. It was still the era where inflation was transitory, but I think anybody who's paying attention thought like, I don't think so. I think it's likely going to show up in the economy in very real ways. So 2021, we launched the business in early March. basically in 6 weeks, we begged, we borrowed, we, took any capital that we could get our hands on. We were happy to take, ahead of making our first investment, which was this farm that's behind me. It's, British Columbia's largest organic blueberry farm. And it was an amazing time. It felt like the biggest sprint of our lives because we wanted to get it done before harvest, or the season began rather.
Yeah.
We did. So, I mean, mid-April 2021, we closed our first deal. That year in 2021, you'll recall that's when the inflation print started to really kick up. Land values went really, really nuts in, well, both the US and Canada. Like the rate of change was probably at a like 20-year high that year. And
Wow.
so we thought like, wow, look at us. How smart are we? We made this investment right ahead of like land value starting to rip, and, in an era of very cheap interest rates. Um, and ultimately we had really good performance that year for that reason. And it was an auspicious start for sure.
Yeah.
And we felt very good about what we were doing and who we were partnered with, and ultimately the product we were growing.
And so on that note, thinking about the starting point, you had gone from a very established build that you helped scale
Yeah.
to then starting from scratch. And as you mentioned, like you were just hustling to find, the capital allocation to start to get this off the ground and make that first acquisition, which looks absolutely beautiful. Just looking at the visual behind you, kind of
Yes.
idyllic
Yeah. I
and
have to say.
dreamy.
Yeah.
And so, just thinking about that first conversation to make that acquisition, we're talking now about an asset, but on the human side, you're going over, walk us through what that felt like to talk to the person who owned that land and kind of how that how that experience was from a buyer's perspective. How were you looking at that? What did that look like? That first
Yeah.
acquisition?
No, it's a great question. So as you might expect, like through my career, I met tons of growers across the country and developed really good relationships with them. After I left, many of them reached out to me and said, "Hey, like, what are you doing? Sorry to hear that you left. It's great working with you." And obviously, I said, thank you, appreciate it. And at the time, we were like, "Look, we know we want to invest in healthy foods. We have this view that real assets coupled with healthy food production has a really, auspicious future that we want to be a part of." One of the growers that I had a really good relationship was a large blueberry grower in British Columbia. And he said, like, "Look, Marcus, like there's this organic blueberry farm that I know the manager of, and his investor group basically want liquidity." There was about 8 people who had funded it. And so, as you know, when there's deals with 8 people in them, generally people's interests diverge over time.
Yeah.
And it seemed like an liquidity event was the best solution
Mm.
for the farm manager, the guy who was basically running the day-to-day ops. So what it was really about was this farm had been acquired by this group. It had been developed, optimized, and after, let's say, 6 or 7 years, there was a divergence of opinion as to what to do in terms of stay invested or get liquid. And the get liquid folks won. And so basically, through a very close relationship, we were introduced to the party, got to understand the operations, the vision, and in 6 weeks, we were basically able to execute that transaction because we had a pretty good sense of how these assets traded. Obviously, that's what I did for a living, so I had a pretty good sense of how to value these things.
Yeah.
And that was it. Really, that was the beginning. The rest is history, as I say. It was really about creating a liquidity event for a number of financial investors in this farm.
Yeah.
Uh, and in doing so, enabling the operator, the guy that was doing the work, enough capital and support to really unleash his potential and allow him to really execute his vision for what he saw this farm becoming. And that's been a major through line for our work here at Shire. It's really, we started in the organic blueberry space. It's still our largest segment in terms of what we invest in. And this farm has basically 3x'd since we
Wow.
made the initial acquisition, which was always the vision. It was really to help expand in this valley, kind of control more of this specific microclimate, and grow, I think, by far the most organic blueberries on the west coast of Canada. And it's been really cool. We just finished our 5th season, so
Wow.
that was it's been a lot of blueberries, that's for sure. And honestly, long may it continue. It's an amazing product, amazing food source, and that was ultimately what led us to be interested in the first place. Just this understanding that, wow, like this is a phenomenal product. It's so
Right.
good for the consumer. Um, that's really how we led our thinking on this. I think that was the main criteria. What is the product. It seems basic, but the product is not the land, it's what the land produces. Right.
Right. And so thinking about sort of how you evaluate the value in a business. And so if we just kind of can get into your headspace, your framework for how you look at an opportunity.
Right.
I'm hearing a few things. I'm hearing, this idea of, okay, our core thesis is around access to healthy food. It's about producing healthy food that's very values aligned. And so blueberries, antioxidant properties, all these wonderful things in that particular product. So product being core to that.
Yeah.
What else? What are the other couple of factors that are really critical to you that are kind of make or break when you look at an opportunity?
Yeah, for sure. I mean, I think it won't surprise most folks that are interested in buying businesses, but there's a lot of commonality. I think you want to have a terrific product. You want to have some kind of niche, some kind of moat that is defensible. So
Mm.
the real challenge in agriculture is if things are good, farmers will just grow more until it's not good.
Hmm.
Classic problem. They
Hmm.
Farmers will grow themselves out of a profit if given the opportunity. And so
Interesting.
generally speaking, you want to identify pockets of the overall market that do not scale forever. And that's generally because of some kind of geographical or physical constraint, like i.e., you cannot grow this anywhere else.
So
That's
land becomes your actual moat in a way.
a,
Land, environment.
correct, a literal moat. And
Yeah.
I think that that is so important. If you intend to own something and compound in it for the long term, is that you really understand what that is. And for us, with regard to the organic blueberry opportunity in British Columbia, ironically as valued as organic healthy food is in BC. It's incredibly hard to grow organic berries in the Lower Mainland because it's so well, populous, but it's also very very wet. And when
Right.
things are wet, it means there's pathogens and the ability for things like fungal pressure to spread and other pressure to spread that are very difficult to control with organic inputs. So what you really want is something that's relatively dry and relatively isolated. And there's just not that many places in the south coast of BC that have those attributes. So the valley where we're situated happens to be um, quite well appointed with regard to those two factors. It's at elevation, it's dry, it's a valley, so it's isolated from the rest of
Yeah.
the Fraser Valley. And because it's at elevation, the product also comes later than most of the other fruit elsewhere in the province.
Yeah.
And that's the moat. So you have organic fruit that comes later in this little window that basically is very, very hard to replicate. As
And
far
I
as
think
we,
what's
yeah,
What's really key for folks who are listening, one of the things that is very clear to me is just that you're extremely values driven, thesis driven, and extremely systematic in your approach. However, there is a deeply human aspect here. You're talking to folks that typically this is their life's work.
that's
How
right.
do you think about the human side of going through diligence, going through that dance, and then what comes after?
Oh man, it's so important that that relationship is dialed in and that you have this level of trust and transparency that's you're gonna be betting on it for a very very long time and hopefully the rest of your career if things go well. And
Right.
so I think the thing you're looking for is obviously um, a level of rapport where you can trust somebody because you're going to be working with them for a very long time. You want to be very avoidant of magical thinking because that's a very dangerous trap and obviously a compelling one. People can very much believe in what they're doing, but if they do it to a point where it just stops really being tethered to reality and what's actually possible,
Yeah.
I think you're potentially setting yourselves up for disappointment.
Actually,
So, yeah.
on that note, magical thinking and the owner's mindset themselves, as you think about deals that you've evaluated but haven't done, have you ever walked away from a deal?
Oh, sure. I mean, most of them. I think. I think
Interesting.
a lot of it is likely to do with the first two factors, to be honest, before
Yeah.
we to the third.
Yeah.
Um,
Product, moat,
oh yeah.
third being,
Well, the relationship, right? The partnership.
mm,
We're not at least in this stage. We're not going in there and running a farm ourselves.
yeah,
We're highly reliant on that counterpoint who has the situational credibility, the knowledge, the expertise, the education
yeah,
to make it happen. And if that
yeah,
relationship is not good, like we're really kind of up that creek without a paddle, as it were. And so having a sense of the counterpoint's integrity, commitment to what they're doing, groundedness and ability to formulate a plan and execute consistently. I mean, that's everything, right? It's going to be absolutely critical. And I think for me, what was really helpful is that I had been in the industry for, a decade at that point. You kind of got to know who was who, what their reputations were, what their histories were. The proof is in the pudding, as they say. Like, show me your crop yield records and tell me like how good you are at this. That's incredibly important. But
Show me. And this is actually something really, really key here. We talk about how, and I've raised money for my past company,
right,
and in a VC conversation is much more about the future. How big could this get
right,
versus the buyer conversation is typically show me the results, show me how you've achieved those results, right? Like prove
that's
it kind of. And is that your experience as well as you're thinking about validity? It's both, but it's what are you buying, right? A lower risk asset ideally.
oh, for sure. I mean, definitely more the latter. It's, proof, evidence.
Yeah.
The more you have it, like the more difficult it is for someone to, you know, distrust what it is you're saying. And that's
Yeah.
obvious. I think most people, you say that, it's like, hey, show me the evidence, right? It's like, well, duh.
Right.
It seems obvious. It's, particularly for something like this, it's like, this is not going to 10x, right? It's
Right.
not like the berries are not going to magically, spontaneously like compound into being
It's a
10x.
generational hold for many, right?
Ex-
Like is
ex-
what it sounds like.
exactly. The,
Yeah.
the the way you build wealth in the sector is it's through the balance sheet, right? Your income
Hmm.
statement produces hopefully income and gains and free cash flow that you use to expand the balance sheet. And if you do that consistently over time, you can do very, very well. And that's really a result of the balance sheet, right? It's not because they were, increasing their profit and revenue on a per acre basis every year. It was really the balance sheet kept growing. They made enough money to support it. Inflation does its thing, and then 30 years down the road, all of a sudden your balance sheet is enormous and
Hmm.
on a a pile of wealth that you probably didn't even perceive accruing over that time
Right.
because life was pretty consistent. You farmed, you harvested, you sold it, you tried to take a vacation, you tried to buy the neighbor if they were selling, and that was it. I mean, farming has been a relatively predictable and consistent business model for a very long time.
Well, and especially in Canada, when we think about our geographic mass, right? We have the population, maybe a little bit more now than California as a state, and this large land mass, tons of farmland. So I can
Right.
absolutely see, the potential there. And it's not a space that many of us, especially in tech, have really thought about
Yeah.
until perhaps after exit. And we were chatting a little bit earlier just around how a lot of the folks on the LP side of the fund, which are folks who are limited partners, they're investing, have come from a very intangible world of tech. I'm curious, as you think about the relationships you formed, the folks who are there investing, what's the why for them? What's sort of, as you think about folks who have exited, who might be even listening pre exit to how
Yeah.
they want to allocate their wealth, what would you tell them?
Yeah, I mean, it's a great question. Honestly, I would say the the most common situation is a family or an individual have generated a lot of wealth, generally through a concentrated position in some kind of business. They have some kind of liquidity event, and they're like, "Wow, I realize how risky and crazy and volatile it can be to take the risk required to gain wealth. Now that
Right.
I have it, how do I keep it?"
Mm,
And many of them come to the idea themselves that, you know what, I would really like to just own land,
mm,
something that I know is
yeah.
immutable, scarce, fixed, it's not going anywhere. And ultimately, I don't have to think too much about it. I know it's going to be there because, I mean, there's a saying. It's like there's strategies you pursue to create wealth. There's other strategies you pursue to keep it.
Mhm.
And I think that's really the change in mindset once somebody attains a level of affluence that they're in a situation where they're, look, I've just been executing, like driving this bus, like trying to execute my mission. Now that, I've kind of got off the stop here, I'm like, well, now what? I mean, that's
Yeah.
one emotional trigger for many people is I just want to own something that's real that I can rely on, that's
Yeah.
not correlated with anything else I own, ideally that protects me from inflation long term. But I know if my kids or my grandkids um, want to look at where their wealth is coming from, I know it will be there.
Yeah.
Like the land we're investing in is well, it's been around for a very, very long time, and it's not likely to go anywhere anytime soon. And it's a pretty rare asset that can say that. And I think the other part of it is the values piece, as you had mentioned, right? I mean, for so many, I think it seems almost trite, but like, who doesn't think it's a good idea to produce more healthy, sustainable food? I mean, generally speaking, if folks are um, aware of its
Yeah.
benefits for themselves and their families and obviously society at large, it's a very easy thing to get your head around. Wow, that's positive. Like, this product is amazing. I probably have it in my own fridge. I probably feed it to my kids, and I would like my family to consume more. I want that to be how I align my wealth, right? In terms of
Yeah.
what it's owning, what it's producing, what it's enabling. Producing healthy foods, I think, is it's a pretty common desire for many, many people
Yeah.
who have gained wealth. So those two things, I mean, that sense of permanence and that sense of values alignment, I think, are really ultimately what attract people to the space. And it's just so different generally from other assets that they own. And I think one of the reasons that's true is, well, I mean, as I said previously, the amount of crop that you grow and its price is generally totally unrelated to what's happening on the Nasdaq, the S&P 500, or what's happening with rates, even because by and large, a lot of the farmland space is not heavily levered. Like, so much of the asset class has been owned generationally with very
Mm,
little requirement to take on debt relative to the value of the assets, that it's not hyper financialized. So you're not going to have like rate shocks really disrupt the overall picture of the farmland environment. And as I said previously as well, people do not panic sell the farm
right.
because
Right.
you can't, right? You literally can't. If the next 30 years of your life and your livelihood are dependent on having control of that asset class, you do not sell
Right.
because, especially under duress.
So, and just hearing this, just to kind of close the loop on how you're thinking about this, there's this beautiful first point you put forward around, just because you were a great wealth creator does not necessarily mean your skill set is wealth allocation. For some, it may be. And we see this also too, just in terms of what folks want to do next, what they're exiting to. We work with
Right.
them 2 to 3 years ahead to really help define that. So you're not waking up, looking at your bank account and going, "What do I do with this?" Right? We want to surround them with the right folks like yourself who are starting to think about and expand their thinking around,
Right.
where their values will drive their wealth allocation plan and what that, what folks they need on their team to help them think thoughtfully about where that goes. The other piece just around the amount of wealth that is tied up in businesses in general, but in
Yep.
literal land. And there is as you know, the great succession. There's a couple $1 trillion worth of assets that are going to be succeeded in the next 7 years. There
Right.
is one of the largest economic moments of wealth transfer happening, and
Right.
I'm sure you're seeing that
Oh, yeah.
in farmland, right? So, what an interesting moment and great time for you to be in this space to support those families and unlocking some of their wealth,
No,
right?
no question. And it's, I mean, the corollary with a lot of other industries that I'm sure you're familiar with, it's definitely true with agriculture, and it's been a common refrain that the average farmer is over 60 now,
Yeah,
and generally speaking, there's not nearly as many of their kids that are interested in staying on the farm, because what's happened with so many of these family farms is they've not been able to keep scale with
mm,
the leading operational models that require immense scale, particularly if you're talking about grains and oil seeds. Like, farming and agriculture is generally a business of either extreme scale or extreme niching.
right,
And if you're stuck in the middle, it's tough. It's tough to reach escape velocity where there's enough cash flow to make it all make sense. And, really, the retirement plan for most family farms is, I'll sell the farm, right?
right.
Literally. That's the balance sheet. That's where the wealth is. And often that's what happens. Mom and dad get to an age where they want to retire, they want to hang up the boots, and there's no one to take over. So they're looking for someone to acquire the assets and basically fund
Right.
their retirement. And that's, when I was at Bonnefield, that was a big part of what we were doing. And, really, it was the idea of providing a financing solution to
Mm,
this succession issue that had been occurring, not
right.
just in Canada, but, in much of the West. Um, and
Incredible.
it's an enormous market that's basically, I think maybe 2% of Canadians have some kind of direct contact with, but most do not. Um, but yeah, there's 150 million acres in this country, probably valued at pretty close to $1 trillion Canadian these days. Um,
What a space to be in, and to also not just be creating value for the LPs that are part of what you're doing and for yourself and your family, but unlocking wealth for folks who
right.
have had generational land ownership and farm ownership and have been growers, and just this partnership that you form for them to participate in the liquidity event, but also to see further wealth creation, value creation, which ends up being wealth creation through the process.
Yeah.
If there was one thing, Marcus, you could tell a potential grower or family who owns a farm, or investors in farms, if you think about who you work with typically, that they could do, one thing they could practically do today to get a little bit more ready for conversations with someone like yourself, what would you say?
Yeah, I mean, I think it's to have a really clear sense of what that buyer persona and motivation actually are.
Mm,
Because, I'll take our example. Like, we are not trying to boil the ocean. I mean, there's just no way. Like, obviously, we're still a very relatively small business, with a hyper focus on a specific niche. And I'd say, really, if we talk about the fruit sector, which we've been focused on, it's way less than 1% of the overall farmland space in this country. Way less. It's
yeah,
a tiny sliver. And so, generally speaking, if somebody's growing, let's say, lentils in Saskatchewan, it's just we're not going to be the buyer. It's just we don't do that, right? It's just
right.
not what we do. I think there's a tendency to lump, participants in an industry into a big bucket and be like, I'll just talk to any of them and just see, and what's the conversation, can't hurt. But I think a little bit of research goes a long way, and I think a little bit of research into what the objectives and rationale and motivations of any organization are, can go a long way in helping frame a productive conversation. I'm sure you've heard this in sales. It's like, if ultimately you're trying to sell, you're exiting, you're literally in sales, right? There's
Yeah,
normally some magic words that somebody is looking to hear that will light them up if you can just figure out what they are.
yeah,
And ultimately, I think a lot of time maybe gets wasted because the work isn't done up front, or there isn't a clear understanding of what it is those folks are actually looking to do. But the space has proliferated in a way now that there's so many more participants doing ag and farmland investing than, really my career started in 2011. Some folks are focused on Ontario or out west or row crops. We do fruit. Other people do whatever. Like, there's all kinds of different folks out there, and I think spending a bit of time to, parse out who the participants are, what their objectives are, and who, might be a reasonable counterpoint for you given your circumstances, is time well spent, because it's a people business. Obviously,
yeah.
if you're trying to put a deal together, some rapport, some trust, some understanding that why is this good for me, needs to kind of come across in those early conversations, or it's going to be very, very difficult to get anybody's attention.
Absolutely. And this is something we work with our clients on too. It's this idea of understanding your own exit vision, your own preferences for deals, not plan, because this is a very artful science, if you will, more art than a science, very
That's right.
human. And people buy from people. So I love this idea of just making sure you're thoughtful about seeing your company as a product, understanding its own value proposition, and then working with and deepening the relationships with folks like yourself who come knocking. So you started this, you have, acquired land, that great, beautiful example of the first piece of land that you acquired and the
That's
farm
right.
and the
Yes.
growers. What is next for you as you look ahead at your own value creation story as a buyer at Shire? What is the future of Shire? Where do you see this going?
Yeah, I mean, it's a great question. Obviously, it's an important one to ask, and, for us, it definitely feels like with the exit in our fund story, it was the end of a really great Act One, and in Act Two, it's been a really fun exercise to take a step back and have a look at, what our perspective is from where we've come. And we've been in business now for 4.5 years or so. And I think what's been really interesting is we've been exposed to this surface area of transactions and relationships, that obviously we couldn't have perceived when we started. But I think our overall mission to produce more healthy food it's a really unifying purpose for us. And when we look at the opportunity set that we have, I think one of the cool things that we've seen having created the surface area is, we're really obsessed with this concept of producing healthy foods. And so we identify what we think is healthy, and we have a look at, okay, we want to get involved by owning the farm. In doing so, we've also looked further down the vertical stack and seen there's all these businesses that go into this process of producing the amazing products that we see in our grocery stores that hopefully we're able to feed our families. And looking at these sorts of businesses, what we recognized was their ability to generate cash is a function of their exposure to this kind of surface area. And we're like, wow, actually, having done the work of building a balance sheet that's optimized for scale, which has always been our thesis in kind of buying these assets and leasing them to farm operators, we're like, actually, these businesses start to look really attractive when optimized appropriately. So this is the concept of getting the balance sheet right to support the income statement that matters. I'm sure this is something you talk to your listeners and your clients all the time about, but are you right sizing the balance sheet and allocating capital appropriately? So what we found is looking up and down this vertical stacks, we're like, what we think we're creating are these really interesting businesses that generate cash. Nobody's really focused on them. They're not enormous deals. They tend to be small, maybe high single digit million deals. And I'll give you an example. One of the industries we're looking at now are apiaries, which are basically, bee farms or honey farms. And it's something that really percolated out of our interest in owning orchards because pollination is such a critical input for an orchard. I mean, it's so indicative of how much fruit and how high quality fruit an orchard might produce is how effective was their pollination season. And honeybees are a major, major source of that pollination. When we looked at it, we're increasing our exposure to these orchards, but at the same time, there's this one industry where you're looking at, wow, the future here looks a little bit, maybe suspect. There's a lot of volatility, bee mortality is always in the news. Beekeepers, it turns out, like a lot of other industries, are getting older. There's not that many people that want to come into that space. It turns out stinging insects are kind of a rough sell. But we're like 5 years from now, like who's going to be providing these services? And we've been looking at investing in the space by basically partnering with really talented operators that have a vision and helping them increase their balance sheet in a similar way. But it's the first time we're acquiring an operating business as opposed to we're buying a piece of real estate, a farm and leasing it. We're buying an operating business because we see that it ties into our overall structure of owning these orchards and producing high quality food. And we're excited about that because we're pretty sure there's other parts of the vertical that this will make similar sense in. APRs have been a very fun way to start. It's it's kind of a buzzy sector, as it were.
Yeah.
And we're looking forward to exploring the opportunities that make the most sense in supporting the same mission, which is ultimately producing more healthy foods. And so we started with the farms and basically looking up and down the vertical stack, we're seeing, we think, pretty attractive opportunities to supply capital to solve that problem.
So I love this. There's this evolution of your thesis. Step one in your plan, if I could kind of boil down what I'm hearing, is, hey, let's buy the land and then let's lease it. That's our revenue model. That's how we create any kind of meaningful return. And then from there, what I'm hearing from you is you are then moving into this idea of owning the farm,
Right.
owning the full supply chain from the moment, what we think about, and you talked about earlier about this idea of only 2%
Right.
of our folks really understand this particular niche.
Right.
And yet all of us are affected by our food supply chain. When we go
That's
to the
right.
grocery store, we see an end product. So I love this idea of like, how might we own more of that stack to own the farm? And then, we had talked a little bit about this specific space. So now you're going into diligence, looking at a business in a different way because you're now going to be operating and accountable for an operating entity.
Yeah.
What is the mindset shift for you in terms of how you wear the buyer hat, you jump into diligence? Are you looking at it a little differently? What are you looking at?
For
What's
sure.
most important?
I think the primary lens is shareholder value. When
Hmm.
you acquiring a business, you have to think, okay, who are my shareholders? How am I going to generate return on their capital for an appropriate amount of risk? And what do I intend to do with that over the long term? And when I think about the kinds of businesses that we look at, the whole reason we love it is this idea of permanence. It's like as long as you're producing that product,
Yeah.
that input is required. So there's not a lot of risk per se with regard to the fundamental reasoning for that industry to exist or for that business to
Right.
exist. It does a thing that's important. But ultimately, because it's not something that's going to, organically grow or have like, crazy upside, it's just a cash generation machine, ideally. And so
Right.
for a shareholder, our thinking is the opportunity to compound in the space, to consolidate these sorts of businesses that fundamentally support what we do anyway, is a compelling shareholder value strategy because of the ability to reinvest that capital continuously to
Yeah.
ultimately capitalize on this availability of cash flow. Um,
Right.
and in doing so in a way that's aligned with shareholders and respects their interests. I think that's been a really interesting learning for us in terms of looking at alignment on this side of the business and really why that's a bit different from simply owning a piece of real estate and leasing it to your counterparty. Um, yeah, I think that the lens of a shareholder and how
It's
you're creating
exciting.
value is critical. Like, what are you going to do to
Yeah.
generate returns for your investors?
Yeah.
Can you explain it in 3 bullets? That would be super helpful.
Right.
Um, yeah, for me, that's a huge part of what we're looking for because otherwise, how do you understand it, right? If you can't rationalize that piece of it,
The storytelling piece is critical, and I think what I'm hearing is just this idea of how will we create shareholder value? What is our thesis? What are the 3 key levers that are gonna pull? And this is the type of work that we do with our clients in
right?
thinking through the lens of how do we build a more generational version, more valuable version of your business? Is
Right,
it as valuable as it could be if you really objectively look at your business?
right.
And I'm sure you would agree with this, and let me know if you disagree, but I
No,
think every business has opportunity to grow, has opportunity to be more valuable, especially
totally.
when you think more systematically about that value. And so love the direction you're going in
Yeah,
and this succession challenge that you were talking to me earlier about, just in terms of you see a lot of apiaries, for example,
right,
without a succession plan.
right.
Owners who have been doing this for years. Is that part of your thinking? Is there's an opportunity for you to roll it up? How do you sort of perceive that? If you don't mind me digging
Yeah,
into your thesis a bit.
no, for sure. I mean, there's clearly an economic scale where these sorts of businesses make more sense, and I think it's certainly one of those industries that there's plenty of deals to do if you have a really good strategy around what your capital is doing or how are you actually scaling value. Like, what is the objective? And for us,
Yeah,
it's pretty clear. We add more bees, we pollinate more acres, we create more fruit, but at the same time, we have more honey and more bee products. So there's a whole strategy around how are you marketing, selling, and distributing this product. I think really though, it's not us being the geniuses that are trying to figure out these opportunities. It's really finding the entrepreneurs that are already doing it, but they're
yeah,
constrained for some reason. I think for us, like there's a more principled approach where basically we're looking for something that is in the vertical of producing a healthy food product that
yeah,
scales with its balance sheet. So basically, as you get a bigger balance sheet, your P&L metrics start to look a lot better. That's key, and you're producing healthy food. Secondarily, can we buy these businesses for, let's say, 2 to 4x of their cash generation, EBITDA, let's say, or just EBIT? Um, that's huge. Like you obviously, if you're buying for cash flow, you have to be buying at reasonable multiples of cash flow with a reasonable dependence on their maintaining those cash flows, right? That's
yeah.
key.
The
So,
predictability of that. Yeah.
right. And then
More risk, less value,
right,
less risk, more value. Yeah.
correct. And then the third piece of that is if you're doing those two things and you're generating cash, what are you doing with that cash? And for
Right.
us, that's where the consolidation comes in. It's like, well, talk to these entrepreneurs and say, what is your strategy? Most of the time, it's I want to be bigger.
Right.
I
Right.
have all this operational leverage that I've invested in. I have the team, whatever. I could be 3 times bigger. Is
And
it's the
that's
most common thing we
that's
hear
fascinating.
from farmers.
Yeah.
Like no
Yeah.
matter what they're doing, if I
And
had capital, I would be bigger. Right.
yeah, and I think this is a story that we hear often from other sectors. We work across industries. For example, a lot of our clients are in very tech-enabled services, although I'd
Right.
argue that every business today, and I'm curious too, like farm, there's a lot of tech that goes into every business these
That's
days,
right.
and every business is touched by it. Um, but I think this idea of I've gotten here, I've gotten to this moment, and not for everybody, but for those who want to participate in the upside, this is typically the moment where they're reaching out to a private equity buyer.
Right.
They're being, reached out to inbound by these buyers because they've built something attractive. And
Right.
so it is really just a question of how big could this get and do you want to be a part of that upside? So I love the direction of where you're going and I'm excited to continue to follow along. And no doubt everyone listening here in Canada, at least, will have probably seen your product at the very end on their shelves. I know I will with the amount of blueberries we buy this
Yeah.
household.
I hope that's the case. I mean, it's an amazing product, and yeah, obviously, you get it. It's something that so many of us consume daily. Right? It's become such a staple, but for good reason.
Thank you so much for joining us on the show today. I so appreciate your perspective.
Thanks for having me on. It's been a blast.
That was Marcus Mitchell of Shire Capital Management. Marcus didn't just buy farms, he left a secure role to build his own firm. His story is as much about being a founder as it is about being a buyer. And for anyone preparing for an exit, his mental models and perspectives are a powerful guide to what the other side of the table is really thinking. Getting to the Deal features strategic founders who have successfully exited, plus the advisors who've guided them through their entire journey, before, during, and after the deal. Exit Horizon is a private, highly vetted membership for Canadian entrepreneurs planning their strategic exits. Systematic expertise you need to maximize value and design what comes next. So what resonated with you from today's story, and what questions should I have asked? Connect with us at Exit Horizon on LinkedIn or reach me at Krystyn@exithorizon.com. I'm Krystyn Harrison, and subscribe to Getting to the Deal wherever you get your podcasts. We'll see you next week.